So today we want to look at variances, as we had said in the last lesson. And the topic of variances is very common in the exams. And when you talk about variances, it is simply an exercise where we compare the expected values or the standard values and the actual values. Now, the difference between the two is called a variance, and that variance can either be positive or negative. However, we do not interpret them on the basis of their signs, because signs may depend on how you have arranged the items in the formula. So what you need to check more is about the size of the values, such that you'll be able to say this variance is favorable, while this other one is adverse, depending on what it is that you are computing. So to start off, I want us to look at a question that is here of June 2004. June 2004, question 2A. Question of June 2004. Question of June 2004. Question 2A. Question 2A is question 2A. Question 2A is on pages 150 to 151 of our past papers. Pages 150 to 151 of our past papers. So the question says that from past experience, a company operating a standard cost accounting system has accumulated the following information in relation to variances in its monthly management accounts. Its variances fall into two categories. We have those which are not worthy investigating, and we have those which are worthy investigating. For the first category, corrective action has eliminated 70% of the variances, but the remainder have continued unchanged. The cost of an investigation averages 3,500, and that of correcting variances averages shillings 5,500. The average cost of any variance not corrected is shillings 52.50 per month, and the company's policy is to assess the present value of such cost at 2% per month for a period of 5 months. Now, you are required to come up with two decision trees to present the position if an investigation is carried out and the position when an investigation is not carried out. That question is in an area we call investigation of variances. Is investigation of variances. That is where it has been extracted, the investigation of variances. Anytime you see a decision tree, you know very well, or you should always, first of all, come up with a sketch. You should always, first of all, do a sketch so that it will guide you in doing the correct copy or the fair copy. So here we are debating on whether to investigate or not to investigate. So we have two options here. You either investigate or you don't investigate. Whichever action you take, you are going to have two possibilities. Variances that are worthy and not worthy. Worthy and not worthy. Variances that are worthy, not worthy. Now, for the ones that are worthy, you will attempt to correct them. And when you attempt to correct them, they will either be corrected or not corrected. The ones that are not worthy, you don't bother. You don't bother. You come up on a 10 bob, maybe 5 bob, 1 cent. Ulikuwa nayo lakini saa hii milioni. Haikusumbui sana. Ukiangalia tu hiyo uone milioni, sio maneno mnaachana nayo. Yeah, 10 bob. 10 bob or 1 bob. That is relative. But kama ni kitu kama 1000 ulikuwa nayo na saa hii milioni, utaachana nayo. So you take more effort. Yes, because that is more. Now, the ones that are not worthy, you don't investigate or you don't attempt to correct. When you have not investigated, again, your management is sharp. There is nothing that can be done beyond that point. So if that be the case, it then means that we are going to do a tree that has 1, 2, 3, 4, 5. It has 5 tails. We're going to do a tree that has 5 tails. Now for this one, I would propose we wait until I finish, not unless you're very sure of how it should be done. You just look at what I'm doing. So we have said here, those are the ones that will be corrected and not corrected. And we have when the examiner says 2 diagrams, this is what it means. Yeah, that's what it means. But for our case, I want us to combine them. So that's a set. Now you can draw. Remember, when we are drawing decision trees, there is a design that we follow. So you can see some lines are complete, others are incomplete. Ama kwanza tuandike pamoja. Tuandike hapa ndio uone maneno yanafika mpaka wapi, so that you are also able to. So here we are saying you do what? An investigation, But here there is no investigation. Now, whatever case you have, you will get variances that are worthy, variances that are not worthy. Variances that are worthy and not worthy. So, these ones which are worthy, you attempt to correct or attempt to correct. Attempt to correct. When you attempt to correct, the result will be, some will be corrected and others will not be corrected. That's what will happen. These ones that are not worthy, no attempt to correct. I think now Sasa iko sawa, you can draw. No attempt to correct. So even here, no attempt to correct. And when we say there is no attempt to correct, we are then saying those variances will remain or they will continue. They will remain or they will continue. The variances will remain or they will continue. So do a very nice diagram. No attempt to correct. And therefore, they will also remain. Read here, I can see, but I can see now you're good. Good. There is one thing I told you to look at what I was doing. If you don't want to congest your diagram, you should start from the reverse. Ukianzia huku, there is a likelihood you will either congest or you will allow a lot of unused space. And that is the purpose of having the sketch. Hii sketch inakusaidia kuona how it will be. Ndio unaanzia naipanga in a way that appears good. Ini bora tupate diagram where songa tu. Make sure it is it's good. You know, there's a management course, and one of the things that we are supposed to emphasize is presentation. Because as a manager, you do a lot of presentations to the board, to your juniors, to your colleagues. In the new syllabus, we should also have introduced a lot of PowerPoints and some graphic design packages. Yes, so that when you are called for a conference to present data, you know how to prepare PowerPoints, you can design kitu nzuri. When you are starting there, you are explaining to people, your point is understood. Things are very important. Yes. Those are some of the basic extras that you require. Other than Excel and the Strata and the other, you need to know how to prepare PowerPoints. Okay, so we are through. From there now we start recording the figures. We start recording the figures as presented. Those which are not worthy, we are told they are 64%. And those which are worthy, they are 36. So hapa chini andika 0.36, hapa 0.64, hapa 0.36, na hapa 0.64. Those are the probabilities. Then we are further told by information 2 that the first category, corrective action, has eliminated 70%, but the remainder have continued unchanged. So those which were corrected are 0.7, meaning the not corrected are 0.3. Those not corrected are 0.3. The cost of an investigation averages 3,500. So that one inawekwa hapa 3,500. In the other decision trees that we draw, costs huwa inawekwa hapa ikiwa kwa negative. But this one I'm not going to put it into negatives or into brackets. And the reason is, in the other diagrams, or why you should put it in brackets, is in that diagram, there will be some revenue values and cost values. So kama kuna revenue inflow hapa, then moja ikuwe positive na ingine ikuwe what? Negative. But if the diagram or the question has just revenues zote, then zote ni positive. Kama zote ni cost, then unaziacha zote zikiwa positive. So don't be surprised why these are cost and asiweke kwa brackets. It's because this question does not have what? Revenue. Yeah. But kama tumekuwa na revenue hapa, basi this one will have put into brackets. And that of correcting variances averages 5,500. So where do you think the 5,500 should be recorded? The cost of correcting the variances. Where should we record it? Najua sasa ukifanya hivyo, sijui exactly where you're pointing. Kwa 0.636 ama kwa 0.7? The cost of correcting the variances. Lydia is saying 0.7. 0.36. Are you sure? Yeah, it should be put here. 0.36. Because the cost of correcting is incurred for everyone. It is only after you have incurred the cost that you come to realize this one has been corrected and this one has not been corrected. It's just like this class, I'm teaching everyone. It is only at the end of the lesson that I can tell who understood what I said and who did not understand. But as of now, I'm teaching everyone. Yes, that's how it's supposed to be. Then, the average cost of any variance not corrected is $52.50 per month. And the company's policy to assess the present value such cost at 2% per month for a period of 5 months. So here it will require the present value. And because you people, you have done advanced financial management and mukapita, or you are doing it now, utapita. Can you tell me how to compute that? Inaitangwa nani? The present value of the present value of what? Are you able to read what I've written? Okay, as long as you can read that now. Sorry, I'm from. They did not teach me how to pronounce it. Or at least they told me how to write. So what is the formula? The present value will be the amount. Then? No, I want the formula. One minus raised power minus n, you divide by r. So this becomes, the amount is 52.50. You multiply by 1 minus 1 plus r. R is 2%. 0.02, which we raise by minus 5. Which we raise by minus 5. Then the whole of this we divide by 0.02. So work out that and give me the figure. $24,475. Huh? 7 for 24, 7 for. So we can round it up to 46, eh? Okay, 24,746. Now that 24, it should be recorded where those variances are worthy, but they have remained. So it's supposed to create what happened. 24,746. And it is also supposed to be brought here. These ones that are worthy, we did not attempt to correct them, and therefore they have remained or they have continued. So we are supposed to charge 24,746. 24,746. So I think we are good there. What now we need to do is to get the workings for the EMVs. So below that now, below that, utaandika computation of expected monetary. Let me use the word monetary value. Monetary value at node. The word monetary value is used more when we have both profit, both revenues and costs, but there is no harm even here. So at node 1, when you come to node 1, you can see the lines that are going out here, they are complete. So what we do, we take 0.7, multiply by the costs. Now this one does not have a cost. The cost is 0 plus 0.3 multiplied by the cost of 24,746. $746. Huh? 7423.8. Okay. Let us go to note number 2. Now, note number 2, you will have 0.36 multiplying these 5,500 plus 0.36 again multiplying this value that we have gotten here, 1, which is 7423.8 plus 0.64 multiply 0. Oh, sorry, there's something else you need to add. This one need to be added. Sorry. We need to add. Kama ingekuwa ya negative to the subtract, eh? So we need to add that. We need to add that. So what is the answer now? Because this value is affected by this probability as well. This is a case of joint probabilities. Kama venye tulifanya ile ilikuwa ya math, we multiply the two probabilities. Yeah. Yeah, true. These are 500. And what do you mean that we had 2? Okay, yeah. We had 2, yes. Because these 2 is discussing the option investigation. And this option investigation has this cost. So this cost is certain. So it has no probability because it's an option. These are outcomes. They have probabilities. So once you have computed the expected, and the expected is what you get by multiplying the probabilities with the values, you are supposed to add this cost. Na kama ingekuwa ni negative, then you would have subtracted. Yeah. So that when now we will be at number 4, because these lines are incomplete, tutakuwa tunasema ni kuchagua the value that is at number 2 and the value that is number 3. So you see, by the time we will be at number 4, we will not talk about that 500. So we must talk about it when we are at 2. Because at 4, it is simply a matter of selection, not computation. Okay, give me the answer. 8152.568. 568. Oh, yes, Lydia, I can see that. Let's go to number 3. Number 3 is a case of 0.36 multiplied by the cost thereof, 24,746 plus 0.64 multiplied by 0, because that one does not have a cost. 89.56. Good. Then we come to number 4. We come to number 4. I already have said, if these lines are incomplete, If these lines are incomplete, what you do, you select the values at the points where those lines are going. If you remember the normal decision trees that we have been drawing, we say select the higher. The reason why we select the higher is because those figures that we have been working with, they are the payoffs. That is revenue minus what? Costs, which is generally known as profit. And when you are deciding on the basis of profits, you go for the higher. So, yes. But this question now, I've already also said it does not have revenues. It only has what? Costs. So easy figures all the costs. So when you're making a decision, do you go for the higher or the lower cost? Yes. So you come here and say it will be the lower at, or the lower cost at 2 and 3. So at 2 and 3, the lower is 81.52.568. And that one now has been selected from number 2. So you mark that way. When you mark this way, the advice that you give your clients is that they should undertake what? An investigation. So you tell your client, undertake an investigation. Take an investigation. So I think we are okay with that. Part B. So part 1 was telling us to do 2 decision trees to present the position. We already have done that. Roman 2 says, recommend with supporting calculations whether or not the company should follow a policy of investigating variances as a matter of routine. So we already have recommended. Then explain briefly 2 types of circumstances that would give rise to variances in the first category and 2 types of variances that would give rise to variances in the second category. Maybe I will approach that question this way. Because causes of variances. Causes of variances. Causes of variances. One, measurement errors. Measurement errors. Number 2, use of outdated standards. Use of outdated standards. Three, out of control operations. Out of control operations. Number 4, random or uncontrollable factors. Random or uncontrollable factors. Hyphen, kuna hii word, sijui kama mnaitanga, you call it step in strategy. Yes. Yeah. Leadership, I was squeezing leadership. Leadership and management. It has gone through evolutions, ama evolutions. Evolutions, not revolutions. Okay. This is tukisoma iko inaitwa principles and practice of management. So, These ones, you the capture of Nagani. These ones, they are worthy investigation. These ones, they are not worthy. So I think I've already answered the question now. The first three, you can investigate. Measurement errors is a situation where you are able to mark a measurement. They made what? An error. Yeah. Either in taking the measurement or even in record. Use of outdated standards. You know, any company works with standards. They work with budgets. They work with targets. Even where you work, almost every year you come up with targets, or whichever period you come up with what? Targets and standards. Like even as now here, since January, tumekuwa tukikimbizana na standard ya kumaliza syllabus by this week. Is it this week? The semester start of blocks. Blocks are supposed to start on 21st. So today is the last day that the syllabus should be fully completed. So that was our target. That was our standard. Now, that standard, it is a kitab or when semester used to be 5 months. But we are still using it when the semester is now 3. So that standard is already out of what? Out of date. And therefore, you are likely to see variances. Some of us may not complete the syllabus. That's all. Yes. And as you appraise them, you should appreciate that times have changed or the duration have changed. And other things, if you remember your learning curve, standards are set maybe when an employee is at a particular level. But as they do the job more and more, chances are they may start taking lesser time. So kama uliweka standard when they were taking 3 hours, now wanachukua what? 2 hours. So there will be a difference. And also akiendelea, there is what we call the stoppage of learning. Huyu employee amekuwa demotivated by very many factors. You people you are working, you know what I'm saying. So if by the time you are taking the standard, the employee was very happy and was at the top. Now with the time, so many issues of life have caught up with the employee. Now they are slow, and now they are taking 5 hours to complete what? The job. So again, you find there will be variance, and you need to investigate. The other one is out of control operations. Out of control operations is a situation where you are much aware that my system has gone out, but you do nothing to correct it. It's like in this class, I see a student making noise, but I choose not to talk about it. Me naendelea kufunza, naendelea kupiga makelele. It is called out of what? I'm aware. See at sioni. I'm fully aware, but I choose just to keep quiet. And there are many issues in life you see and you just choose to keep quiet. Then easy, non-random, rather random or non-controllable, there are factors that are beyond. And from your leadership, then you know it's a bit to like politics. Kama sasa around August, unaona kama mitihani ya July imekuwa pushed a little bit earlier. I think they will be starting on the 3rd week of July instead of August. Yes. Yes, I have those dates. I think the 3rd week of July, there is a mitihani is fine. So that is a factor we cannot control. Where's the other part ya IPC wapie nini? Sisi tuko na mtihani ya kasi mpaka sio uchaguzi yenu mbreke pale. No, it can't happen.
June, then
So I hope you're tumeelewa. Something else before we move out of that is we could note a few factors to consider when investigating variances. Factors to consider when investigating variances. Factors to consider when investigating variances. So there are very many, maybe we can cite 4 or 5. One is obviously the cost. The cost involved. You must know how much am I going to incur. Yes. Number 2, the benefits to be realized. Benefits to be realized. And these are very, very important considerations, not only in investigation of variances, even in general life. As you make any decision, it is very important to consider costs and benefits. And not only in the short run, but also in the long run. So that you don't make a decision to run away from a short run cost or to enjoy a short run what? Benefit. And then you usher yourself to a long-term problem. It is very, very important, or you usher yourself to an avoidance of a long-term benefit. School fees that is a short-term cost. Sinakuuma ukilipa school fees. Lakini nakuuma tu a few months. Hii semester tu ulikasirika ukilipa school fees. But as a result of that, you have ushered yourself into a period of long-term what? Benefits. Ile masomo utapata hapa itakusaidia miaka yote. Yes. And the opposite is true. If you chose to enjoy your 22,000, ukule madazi hapa na pale. Na smoky. That was also a short-term what? Benefit. Ungefurahia hiyo pesa. But now you usher yourself into a long-term what? Problem. So those are things that you need to really consider. Unfortunately, most of us are very short-term oriented, very much. Yes, you need to really overcome that because it's also not very simple to overcome it. It's not very simple. Where you are. So you are looking at factors to consider. The next one is the type of the variance. Type. And when we talk about the type, is it favorable or adverse? Which one do people investigate first? Adverse. But you should also investigate what? The favorable, so that you create a better environment for it to be bigger. But unfortunately, when a favorable variance happens, we think it is our right. That's why you don't say thank you. And you lose more opportunities. If I do something for you, a good thing, in my opinion, which I know also in your opinion is good. Now, unyamaze tu. Utafika mahali niseme Sara nimfanyia hivyo na hata hawezi sema kitu. Ngoja siku nyingine utafika. Na siku nyingine bado utafika tu utanihitaji. Sasa ukikuja that's what happens in life. But when you tell me asante, 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 you know people want to be appraised. I don't know whether you know that a basic need of any human being. Yes, to be praised. Kuambiwa umefanya vizuri, kuambiwa asante. Ukiniambia nimekufanyia asante, I will go an extra mile. Kama nilikuwa nimekupea shilingi 5, unaweza stukia nimerudi kwa mfuko nimekuongezea. Simply for telling me I thank you. Yes, yes. So it's very, very important to do it. But unfortunately, most people are not concerned with that. Even where we work, it is only when you underperform, they can form a committee to investigate. But when you do good, they pretend even they have not seen it. Yes. Kama saa hii mimi nikuwafunza nyote mwanguke. The school will immediately form a committee to investigate me. But in Kawafuza, no one will even speak about it. But it's wrong. If you find yourself in a decision-making situation, you need also to investigate what? The family. Because again, it's also not every favorable that is good for you. Naweza nikakufanyia kitu wewe ufurahie, lakini mimi kuna mahali nakutega. Nataka uingie kwa cage. So wewe unafurahia, unasema oh money is good, goja. Siku ya kulipa itakuja. So you need to be very careful. And those are realities of life. Yes. Mtu anakufanyia mema, anakuongelea vizuri. Goja. That's why I tell you, in this world there is nothing for free. Nothing for free. If you right now you enjoy anything for free, either ushailipia na hujua ulipia, or kuna mtu mwingine amekulipia, ama time ya kulipa inakuja. Nothing for free. The other one is size. Size. Now, when you talk about size, that you know it is either small or big. Again, quite often people investigate the big ones. They ignore the small. But if you do some studies on concepts of excellence, they emphasize the ability to pay attention to the details, to the small things. Ukiona tu kakitu kidogo, kadogo tu, even in normal relationships that we form, ukiona kakitu tu kadogo, hata kama hutaongea, be ready to check what is happening. Don't wait for the big thing. It might be too late. Yeah. The other one is the frequency. Frequency. Some people call it trend. The frequency or the trend. Hapo ndio unasikianga watu wakisema umenizoea. So kama ni kitu inalikaa, you need to check what is happening. And many others. I think those are enough for that. Now, on your own, I would like you to attempt this question of November 2018. Question 2A, which is on pages 32 to 33. You check that question later on your own. Haya, tuende kwa hii swali ya because hii tumesoma learning curve. Hata nitakupea kama assignment tutaangalia baadaye so that I don't repeat myself. This question of December 2005, question 3 is on pages 136 to 137. That question, I think we solved it when we were in learning curves. But now there is an extra of the variances. So let me do another one so that I don't repeat myself on that. Let us go to August 2009. August 2009. Question 2C is on page 129. It's on page 129. So on page 129. So if you are there, the question says that the following operating statement, XYZ Limited, relates to the quarter ended 30th of September. We have all those things. So you are told to do a flexible budget. So that question, we normally call it budgetary control statement. Is that a budgetary control statement? Budgetary control statement. Budgetary control statement. So this one is details. So here I have the budget. This budget is what we call fixed budget. And I want us to call it A. Then we have actual results, which I want us to call B. So easy as equal because we are just copying those values as they are given there. It's a little bit wide, we give flexible budget, which we shall call C. Flexible budget.
This guy by sometimes basically
so the very first thing that you bring is the flexing base. Flexing base is the factor that you think is making the cost to change or is making the values to change in your statement. So in our case here, that must be units. That must be units sold. Why is sorry? Have they given the units? The units are missing. The units are missing. I think I should have them somewhere. So units, let me just check so that you rectify. So the units are supposed to be in the fixed budget, they are 512,000. 512,000. In the actual, they are 576,000. And in the okay, kwa variance hapo kwa variance ni 64,000. Pesa kwa your past papers. In the past papers, unaona kuna hiyo line ya units sold. Sasa under the budget weka 512, under the actual weka 576, and under the variance weka 64,000. Now, this fixed budget is the original budget. And you know what happens in any good work or any good situation, you begin by planning your work. Then time comes when you work out the plan. When you work out the plan, what you get is what we call the actual. And when you did the plan, what you got was called the budget. So the difference between the two is what we are calling the variance. And variance, as we have noted, is brought about by many factors. Now, the flexible budget is a budget to prepare after knowing the actual circumstances that prevailed. Whereby you start asking yourself, if I had known by the time I was making my budget, this is what would be happening in the actual, what would I have done? Like right now, I guess none of you has come carrying an umbrella. Sidio? Because in your thinking, kutoka kwa nyumba, huko nafikiria anywhere kutanyesha. Lakini kunawezekana kunyesha saa hii. Then, hiyo kutoka kwa nyumba without the umbrella, the original budget. Mvua kunyesha saa hii is the actual. Sasa ukianza kujiambia, I wish ningejua kutanyesha, ningebeba umbrella. Hiyo ndio inaitwa flexible. is when now you try to change the plan in light of the actual circumstances which have happened. So it then follows that he budgets the flexible, it is going to be done based on kumenyesha. Just like the actual case, kumenyesha. So by all that, I'm simply saying one thing, that the units of the actual are the units of the flexible. You don't know what I'm saying. Kumenyesha, huko unatarajia mvua. Then unaanza kujiambia kama ningalijua kumenyesha. So in simple terms, the units of the actual are the units of the flexible. And just get it that. Then we come here. You give it percentage. Percentage. Now, in the percentages, the original is always given 100%. The original budget, the fixed budget is 100%. So you then say, if 512 is 100, 576 is what percent? What percent? 112. So that is 112.5%. So the same case you apply here. The implication of this is anything in the original budget that is variable, that changes with units, you are going to change it from 100 to 112.5. And anything that is fixed, that one remains. So the task now will be, ukifika kwa particular item, unajiuliza, is it variable? If yes, you multiply. If no, you just leave it. So the first item is sales revenue. Sales revenue. Sales revenue, in the original budget, we are given how much? 819, 200. So you unaiweka tu hivyo 819, 200. Inaka the typing there was not good. Now I'm reading from the very original. 819, 200. The actual result, you have 856, 800. 856, 800. So you ask yourself, is revenue a variable component? Does it change as units change? Yes. Yes. So if yes, this value here, 819, 200, you multiply by the new percent, 1.125. 921, 600. We can compute the variance. So when you compare this and this, give me the difference. 819 and 856. 64,800. And don't put the negative, come on negative. What you need to say is it adverse or favorable? It is favorable because actual is more. It is favorable because actual is more than budget as a result. If you compare now this and this, here the actual and the flexible, the difference is, I want the figure. This 856 formula minus 921. 856,800 minus 920 or vice versa. 64 is the same. Kuna kitu nilisema when we began that these variances can either be positive or negative. But nikasema when you are interpreting, they have nothing to do whether it is positive or negative, because you can rearrange the components of the formula. So when nimeandika hapa CB, si lazima forever ikuange hivyo. It can also be B minus C. Yes. The issue is the difference. The difference, then unaangalia the one that I'm comparing, is it bigger or smaller? Whatever it is it good or bad? Like now here we are saying this one and this one. Tuna compare hii na hii. The actual is more. When you get more revenue than what you thought you would get, is that good or bad? It's good. Higher. Hapa, the budget here is 921 is bigger than what we got here. See there? The 921 is kubwa kuliko hii. So is that good or bad news? It's bad news because the actual is smaller than what we should have gotten. So that is adverse. The 1.125 is this one, 12.5 divided by 100. Is that okay? A minus B. You're getting a different answer. What are you getting? 37. Oh, actually, hata hapa kwa kitabu kwa karatasi ni 37,600. Kwa karatasi ni 37,500. Is it indicated that way kwa your past papers?
Yeah.
37,600. Favorable. Lakini iko sawa eh? Yes. Now, because we already have the full understanding of the entire topic, and I will speak of everything. You know, when I taught you first, I took about this, but now that you also know what is performance measurement. The difference, you see now these ones are giving us different values, but both of them are variances. This is the best, or is the better one, because it compares what should have been vis-a-vis what has been in light of the actual conditions. And these ones are deemed to be the most fair. But this one is not fair because it does not factor presence of some factors that are beyond your control. Like now, venye nimesema, if there is rain today, na tuseme ulikuwa umepewa fare, na mwenye alikupea akakwambia nimekupea 50 ya kuenda na 50 ya kurudi, although alikupea 500 cash. So anatarajia ukirudi kwa nyumba ukue na 400, si ndio? Just for the case, don't find it difficult because utapewa. I'm just illustrating for teaching purposes, si ndio? Yes. Mwenye alikupea fare, alikupea 500 shillings. Hakuwa na change. Lakini ikahesabiwa 15 ya kuja na 15 ya kurudi. And both of you, by the time unapewa hii 500, none of you thought kutanyesha. But here you are, there is a heavy downpour. So you end up paying 80 shillings going back home. So you go home with 300 and what? 70. So you report an advanced variance of what? 30. This person may want to punish you. Kwa nini umetumia more than what we had agreed? And for sure you deserve to be punished because you have reported an advanced variance. If they go ahead and punish you, you will feel so bitter, although you may not have a recourse. Why you are feeling bitter is because umeadhibiwa courtesy of a factor that was beyond your control. Wewe si mwenye ulileta mvua na wakati uliona inakuja hungeisimamisha, sio? Yes. So the person needs to appreciate that kulinyesha. And that's why now umelipa more. Sasa ile maswali yanastahili kukuuliza ni questions such as wakati uliona kunanyesha. Kwa nini hungekaa shule mpaka saa 10? You did not have to go home at 11. Ungekaa shule mpaka fair is stabilized. Na kama shule ilifungwa immediately kazi iisha, kwa nini hukusimama kwa corridors? Those are things you could have done. Na kama hungesimama kwa corridors, kwa nini hukunegotiate na makanga? Kama hungenegotiate na makanga, kwa nini ungetembea kama wewe ni wa Thika utembee mpaka Ngara, kama wewe ni wa Jogoro utembee mpaka Stadi ukitafuta gari ya 50? Those are things that are within your control. Sasa hizo zikiletwa, they are likely now to split this. And if you remember your variances, na tutafanya swali kama hiyo, there is what we call now the planning element and the efficiency what? Element. This planning is what is beyond your control. Tuseme sasa hii itapatikana ikiwa what? 20. And hii nayo efficiency is within which is within your control itapatikana ikiwa what? 10. So this 10 ndio unastahili kuadhibiwa. So tuseme ni viboko ulikuwa unachapwa. Hapa utachapwa viboko 3 lakini hapa ni moja. So you see moja is a bit fair than this. That's the meaning. So in an organization, we should use those words. Yes.
That's the revenue. So revenue will be advanced.
Yes. Why is it advanced?
Okay, I thought that they sold more than they expected.
They sold. Which one represents they sold? Which figure represents? Which figure represents they sold? Which figure represents they expected?
I thought sold was 91,600.
Sold in the expected in the yes. So yeah. So I was still explaining why we need this. The other danger that comes in now. This guy here, according to this variance, you see he has reported a favorable variance. You are likely to reward him, either by giving him a salary increment or making him the senior most guy. But in actual case, the fellow is a poor performer and highly value. Tunakumbuka economic value added statements. Sasa huu ukimwekea value added statement huko chini itatoka ikiwa negative. That's why you see some fellows, they are promoted to your organization or whichever organization, and within no time, the organization that was doing well starts coming because we thought he's good, but in actual case, he's not. Yeah. And you know the nature of human beings, motivation theories. When you do something, even if no one else knows. Ukifanya kitu nzuri, wewe unajua. Ukifanya baya, wewe unajua. Hata kama hakuna mtu mwingine ama unajua. Now, this fellow knows yeye alifanya kazi baya. Sasa umempromote, you have given him a bigger space to do more worse things. So within no time, the company comes down. The other repercussion is you are likely to face a revolt from amongst your workers. When people are together, unaona kama kwa hii class, maybe speaker anaweza kufika hapo. Lakini maybe watu wa hivi ni mnajuana hivi. By morning, just sijui kama mnafika hapo. When I'm not here, siwa mna discuss subjects. And out of that, unajua nani anaelewanga MA sana, nani haelewi. Nani anaelewa FM, nani haelewi. So that happens. Yes. So even at the workplace, unajua who is a good performer, who is not a good performer. So when the not good performer is promoted, you will feel bad and you contest it. So you find the workers, when you are promoted, they are resisting that what? Promotion. Good. So that discussion is more of performance measurement. We proceed now. So you say less cost of sales. Cost of sales. Now, in the cost of sales, the first one is materials. Materials in the original budget is given as 134,400. 134,400. In the actual, ikapatikana 115,200. Ukifika kwa flexible, unajiuliza, is this a variable cost?
Yes.
Yes. So if yes, unachukua hii original 134,400 multiplied by 1.125. 151,200. In case I write a figure that you see is different from what you have in the past papers, change yours. Because the one you have is a typed paper. I'm reading from the original. Haya, sasa, give me these variants. 134 minus this one. $19,200. This other one, 115 minus this 151. This? 36,000. So let's label them whether they are memorable or advanced. Here, kwanza, you simply check. The budget was 134. We spent 115. So when you spend a small amount, is that good or bad? So that is memorable. Higher. According to this one, we should have spent 151, but we spent 115. Is that good? Yes, so it is memorable. So although these ones have reported the same, there will still be a problem to this worker because the worker knows they were supposed to be paid 36, but you can remember what? 19. So they will not be as happy. Will not be as happy. Okay, the next one is labor. Labor in the maybe I can see you laughing. That's good. Labor is 192,000. 192,000 and 230,400. 230,400. So is labor a variable cost in this case? So then we take 192,000 multiplied by 1.125. 216. Then give me the difference, this and this. That 400. Is that favorable or advanced? Is advanced, we spent more. And make sure you don't write it as negative. We don't show the negative side. Higher. Again, 230 and 216 is a difference of 14,400. Yes. 14,400. And it's also what? Advanced. It's also advanced. Huyo mwingine ni overheads. Overheads, we have 25,600. 25,600. In the actual, we have 28,800. 28,800. Is it a variable cost? Yes. It is a variable. Yes. It is indicated up there. 25,600 times 1.125. 28,800. So the variance ya kwanza ni E25 na E28. That's 200. That one is advanced, because we spent more. Is advanced, we spent more. Na hiyo ingine ni 0, eh? Yeah, so that one did not have a variance. Not have a variance. Aya, huyo mwingine ni fixed labor costs. So fixed labor costs. Fixed labor costs. Fixed labor costs in the original is 8,000. And in the actual is 75,200. So is this a variable cost? Yes or no?
No, it's not.
She doesn't want to answer the question as just asked. So when I say, is this variable? I'm expecting yes or no. Okay. So is it variable? No. So if no, you just leave it without multiplication. But if you want to show multiplication, then you simply multiply by 1.0. If you want to show like the others, then okay, 8,000. So the difference we say 4,800. Is it favorable or advanced? It's favorable. It's favorable because we spent less. And even this other side is also 4,800 and also favorable because we spent less. Huyo mwingine ni admin costs. Admin costs. So the admin costs, we have the fixed. Now the fixed ones are 147,200. 147,200 and 148,800. 148,800. So this one, is it variable? No. So it is 147,200 times 1.0. So you still work with 147,200. So the difference in the first two, 6,400. Favorable or adverse? It is favorable because we spent less. Huyo mwingine the same, eh? 6,400 is also favorable. Then we come to the variable. Variable for the original budget is 38,400. 38,400. And in the actual is 43,200. 43,200. So is this variable cost? So if yes, then the same as 38,400, you multiply by 1.125. For the 3,200. The variance for the first one, 4,800. Favorable or adverse? Is adverse because you spent more. Eh? Yes. Yeah. Then in the other one, this is 0. Right? Yeah. Huyo mwingine ni selling costs. Selling costs. So selling costs, we start with the fixed. Start with the fixed. Fixed at the selling the 57,600. And the original, it is 66,400. The actual, that is. So is this cost variable? No. So if no, it is 57,600 times 1.0. So you get 57,600. Good. The variance, 8,800. Adverse. The same case here. With the 800 adverse. Then we have the variable. The variable. The variable is 115,200. 115,200. And 122,400. So is this a variable cost? So if yes, then we took 115,200 multiplied by 1.125. 129,600. So the variance 7,200. Advance, we spent more. Then the other one. The same figure. 7,200 also. 7,200 and it is favorable. It's favorable because you are meant to have spent more. It's favorable. So with that, now you get the net profit. Get the net profit. Net profit for the fixed, although you can confirm, we are given 28,800. For the actual, we are given 34,400. So those ones you can confirm, but these ones are a bit you compute. Kutoka kwa revenues, you compute.
They are okay.
Yeah, okay. Yeah.
For A and B.
For A and B.
This other one is
16.
Make it 66,000.
For variance, some are flexible.
Here it was 16.
16. Then he
56.
5,600.
Yes.
Then you engineer
600.
600 plus. That is when you add them, eh? It's like a reconciliation. Now for your practice, you can attempt this question of May 2017. May 2017, question BC is on page 47. It's on page 47. And you can also attempt May 2016. May 2016, question 4B. Question 4B is on pages 58 to 59. 58 to 59.
And we're going to compare between such a question with additional information. Concentrations like the previous level paper, the question about additional information.
It is the same concept. The same concept. Because the additional information could now be talking on how to compute these figures. We'll be talking about how to compute the figures. But the basics remain as we have outlined. I have like 18 minutes. There is this question on page 121. Page 121. And try to see whether we shall finish. I don't know whether it's that big or we wait next time. So it is a question of June 2010. Question 4B. June 2010, question 4B is on page 121. So the question is about profit reconciliation statement. Profit reconciliation statement. Profit reconciliation statement. So we can allow it a bigger space so that we are able to accommodate formulas and workings. So for the interest of time, we will not read fast, but we'll read as we answer. So the format of a reconciliation is something that you know, and we always begin with budget profits. We always begin with budget profits. And if you want to know budget profits, it is budget revenue. It is budget revenue. Because of the interest of space, let me use the initials, because you should have the notes that have all the formulas in full. But if you have space, you can still write. So this is budget revenue minus budget cost. Budget revenue minus budget cost. So we are told by B, Kimani and Omodi are in partnership producing a product whose standard cost per unit is given below. So we are given that the standard selling price is 2,000. The budget production is 1,000. The actual production and sales in the month were 14,400 and 1,200 units. The sales were at a unit price of 2040. The actual production was okay. So this one, the budget revenue is 2,000 multiplied by the units that were sold. Sales were 1,200. Minus the budget production cost. The budget production cost should be 1,600 times 1,200. Shall work with that so that we scale it down from 1,400 instead of having the stocks. How much? 480,000. $480,000. Then adjustments for variances. Adjustments for variances. Adjustments for variances. We start with the sales price. Now, sales price variance is given as budget selling price minus actual selling price. Budget selling price minus actual selling price. You multiply that by actual units or actual sales units. Actual sales units.
So before we continue, I got the 1200. I got the 1200 with the actual sales.
Yes.
And the formula is budgeted first.
Because I want to narrow it down to the what was sold. Okay. Yes. The budget selling price is 2,000 minus the actual selling price of 2040. And the actual units that were sold, they were 1,200. $48,000. Is it favorable or adverse? Is it favorable or adverse? It is favorable because we sold at a higher price. The actual selling price is higher. The actual selling price is high. Okay, then tuende kwa sales volume. Sales volume. So sales volume is given as budget sales units minus actual sales units. You multiply by standard contribution margin. You multiply by standard contribution margin. So the budget sales units were 1,400. Is that so? Oh, the budget production was 1,000. Budget production was 1,000. Minus the actual sales units. They sold in the actual case 1,200. So starudi pale juu, but later just the standard contribution margin. So standard contribution margin is the selling price, the budget. The budget selling price ni 2,000. Sasa kwa hiyo standard cost iko hapo juu, you are supposed to capture the variable cost. And because the total cost is 1,600, so now I have 1,600, it contains a fixed component of 100. That means that the variable component is 1,500. $100,000. 100,000. Favorable or adverse? It is favorable. I think let's adjust here because of time. Sahau. This one was supposed to be 12 and allows the budget units. Eh? I thought the 1400 and the 12, the budget and actual. I wanted to balance them. So then this one must change to what? 400,000.
Yes, 400,000.
400,000. Okay. Huyo mwingine that we bring is material costs. Material costs. Tumeelewana, Margaret? You are getting? 800,000 instead of 400,000. Confirm 400, eh? Okay. Okay. We're going to clear 14 and 12 in budget actual. So, confirmed, eh? Good. If it is confirmed, to go for material. Material huwa inasemwa as standard material cost minus actual material cost. Standard material cost minus actual material cost. Sasa, the standard material, ukiangalia hapo juu kuna 970. Naona hiyo 970. Sasa hiyo 970, you are supposed to multiply by the actual units that were produced. The actual units that were produced, 1400. Minus the actual cost that was incurred. Ukitembea hapo chini, kuna 17 what? 60. So hii ndio nilikuwa nataka kuimbalance, lakini now that I've changed there, I will not. As in, naona hii budget yetu ya, rather the actual sales hapa, eh? Naona hii ni 12, na hii ni 14. You can balance it by dividing. But for now, let's just proceed that way. Give me the figure. 402. 402,000, favorable or adverse? Adverse. Naona hata the ultimate question alikuwa na hiyo. The original, hii ni 900. Hii ni 900. I can see what happened. 900, let me check whether any other that we have used had an issue. 1500 was okay. Your 2014, 2000, 17, 16. Yeah. Give me the new value. Yeah. 800. 500. Favorable advance. Advance. So kwa karatasi yako hapo wameandika 970 andika 900. Yeah. Yeah. Hii maswali ya reconciliation kwa na shida inaweza kuchukua sana. Labor cost. Labor cost is standard labor cost minus actual labor cost. Standard labor cost minus actual labor cost. So utaenda hapo juu, the standard labor, 1 unit was supposed to be 400. So it is 400. You multiply by the actual units that were produced, 1,400 minus the actual labor cost that was spent, 680,000. 680,000. $120,000. Favorable adverse. Negative, eh?
Yes.
So it's adverse. Huyo mwingine tunaleta ni variable overheads. Variable overheads. And in variable overheads, we compute the total. Total is standard variable overheads minus actual variable overheads. Standard variable overheads minus actual variable overheads. Sasa, unaenda huko juu again kwa standard card. And when you get there, unapata variable overhead per unit was supposed to be 200. So it is 200 multiplied by the units, 1,400, minus the actual of 220. $60,000. 60,000 favorable. Tuende kwa fixed overheads. Fixed overheads. So fixed overheads, we first of all compute the budget. Not the budget, the expenditure. The expenditure. And the expenditure is given as budget fixed overheads minus actual fixed overheads. Budget fixed overheads minus the actual fixed overheads. So the budget is 100 hapo juu. Now this 100 you multiply by the budget units, which one? 1,000. You multiply by 1,000 units. Then you minus the actual. The actual ilipatikana as 120. $20,000 advance. 20,000 advance. Here again, we have to compute if they are stocks. It is the volume. Volume under the fixed overheads, which is given as budget output units minus actual output units. Budget output units minus actual output units. You multiply by budget fixed overheads per unit. Budget fixed overheads per unit. Sasa hii, the budget output was 1,000, but the actual output was 1,400. The actual output was 1,400. Then you multiply by the budget fixed overhead per unit is 100. 4,000. Now this 4,000, 40,000 is favorable because we produced more. But for the purposes of reconciliation, you interpret it in reverse. For purposes of reconciliation, interpret it in reverse as adverse. And then finally, now we get the actual profits. The actual profit will be given as then this one is given as actual revenue minus actual costs. Actual revenue minus actual costs. So what we are supposed to do here, this one we cannot, we need to prepare an income statement. And I don't think I have time for that now. Using absorption costing approach. So that to make a sales happen, to make an opening stock, to make a production, closing stock, cost of sales, gross profit, less non-production, because the fixed they are already incurred. Once you get the gross profit, you compute something we call the over or the under. That will give you the net profit. Now you represent your money. I wish I had the time now, and I already 5 minutes. So what we are going to do, we just get it from here. But we shall do another one later. Shall do another one later. NB here, we normally say the budget profits, you add the favorables, you less the advances, you get the actual profit. Get the actual profit. The 40,000, why we have put it advance? First of all, you see the budget is above. The actual is 1,400. That is good news. Ni kama hii class, mjae kabisa na wengine wakae hapa nje, but they are still getting my voice. I will not go to the landlord and give them more of the rent. I will still pay the normal rent in Nanipa side. So that one is favorable. When you get more output than what you budgeted for the same fixed cost. That is in terms of operations variances. But when it comes to reconciliation, which is more cash oriented, you interpret it in the reverse, whereby you say we must have spent more by producing 1,400. So if we spent more, that is why it comes to advance. Sasa, the same concept is used here. Kumbuka when I gave you two formulas for this price. When you're dealing with operating variances, hapa kwa tunatumia contribution margin. Tunasema standard contribution margin minus actual contribution margin. But now, in the reconciliation, which is cash, pesa ukipata yote, it comes as a full package. Tuseme umeuza ukapewa 440. Now, hii 40 iko na profit yako na cost yako. So you don't separate, you just use it here that way for purposes of reconciliation. So those are the special cases. Yeah. 72,000 as the equal advance. Tumepata ikiwa negative. So kama ni negative, that means they made a loss. They made a loss. So hii nimesema hii working yake because of these two, which I was saying I balance. Now that I cannot balance, you need to approach it using what we call marginal. What we call absorption costing. weke sales, blah blah. So nakumbuka hiyo format ya income statement. Yes. But sasa time imeisha, acha tutafanya swali lingine next time. Tusimamie hapo. Tunaweza ama tunaweza kosa because of I don't have the working.